So in this video, we are going to talk about Intuit, in particular, what Cathie Wood did to her Intuit bag on Thursday. Now, before we get into the technicals, let's actually get into the news. So Cathie Wood's ARK ETFs reported their daily trades for Thursday with a mix of buys and sells across various sectors. Leading the transactions was the sale of shares of Intuit, which saw ARK's financial ETF offloading a little under 4,200 shares for a total dollar value of approximately $2.46 million. The move marked a significant divestment from the financial software company, citing a possible shift in ARK's investment strategy. Okay, let's get back to the technicals, get back to the charts. And this is the monthly chart. We have a huge resistance support band at $475. Relative to this resistance support band, price is now trading at $585. I did have this level marked off. That is the $680, we'll call it resistance level. I did have another level of interest. This is a round hole psychological number at the $600 level. All right, so let's drill down to the weekly chart. And price was sideways until it was no longer sideways. Now, what you're going to also see on the chart, we did have this rally in price. This is coming off of the resistance support band. You had a rally in price. You had several basing candles, 1, 2, 3, and then the rally out. Price attempted to come back to the zone but couldn't, and this signaled that there were buyers waiting to bid up price. Nevertheless, price moves higher, consolidates in a sideways price action market until the sell-off occurred back in May of last year. Came into the level where the footprints on the chart told you that the buyers were willing to bid up the price, and that's what they did. And we had 3 weeks in which price kind of hovered in this level before blasting off, eventually reaching all-time highs. You had an inverted hammer, which told you that sellers were taking control. And since then, price has now, on a smaller time frame, potentially are in a downtrend. Now, is this level still good? Well, we haven't had a candle close below. We've had a piercing and a more drastic piercing. So for me, this level is used up. I would not take this level once again. However, let's just drill down to the daily chart. Now, price is below key 200-day moving average. That's in yellow. Also, the 100-day moving average, which is in white. You also have a depth cross, and that's where the 50 in red crosses below the 200-day in yellow. Now, I want to look at current price. I want to go down. Why did price stop at $532? Well, look at that gap. We have a gap fill, and this is a little level here on the daily chart. I would call that daily buyers. And I do want to put a line to see if price filled that gap. Not yet. Okay. I'm going to take this weekly zone off the charts. I'm going to change that to a daily buyer's level at 510. I'm also going to color code that in blue to represent my daily buys. Alright, so this is the gap fill. I'm going to take this level off at 600. So you have momentum to the downside. Buyers stepped in. Again, you have an imbalance at that gap fill. Kind of tell you that there are buyers in this $520 level. So what's the play? Play is look for price to potentially move lower with the overall market, potentially. But anything near that $500 level, look for buyers to come in and bid up price. Thanks for watching. Subscribe. Please like the video.